This is your LMAX exchange technical update for Wednesday, April 12th, 2017. Euro dollar. So right now we're trying to figure out if the euro is looking to put in a higher low above 104.95 in favor of a resumption of gains, eventually back above the recent 2017 high at 109.06, or if this is a market that wants to put in a more significant bearish resumption on a breakback below 104.95, which would open the door for a retest of the 2017 low at 103.41. Right now, we are seeing a bit of a bounce out from 105.80 from that area there that was that 78.6 fib retracement and bottom of the daily Ichimoku cloud, which could suggest the potential formation of a higher low. Of course, we would need to see initially a break and close back above 107 to strengthen this outlook and accelerate gains. Until then, we're still in the middle of this range, and it remains to be seen whether the market wants to break higher or see a resumption of the broader downtrend. Sterling dollar. So despite cable gains in recent sessions, the market continues to be very well capped into rallies and remains capped below that December 2016 peak at 27.75, which keeps the overall pressure on the downside. And so any rallies that we do see in the sessions ahead should continue to be very well capped up towards 126 in favor of the next major downside extension towards the 2017 low at 1987. Of course, we would need to see a breakback below 23.24 initially to strengthen the bearish outlook and accelerate declines. Until then, we're just chopping around with rallies seen well capped, but again, we need to see that break below 23.24. That's the low going back to the 17th of March to strengthen the bearish outlook and accelerate declines. Dollar yen. So dollar yen is finally broken down below that major psychological barrier at 110, and this strengthens the bearish outlook, exposing that measured move objective that we've talked about at 107.60. The 107.60 objective comes because we had consolidated between 115.60 and 111.60 for much of 2017. That's a 400-point range that was finally broken, and that breakdown projects a 400-point move to the downside, which would equal 107.60. At this point, look for any rallies to be well capped, with only a breakback above 112.20 to delay the bearish outlook. Euro Swiss. So Euro Swiss has been consolidating over the past several sessions, but overall the trend here favors the downside, with the market potentially putting in a lower top at 108.26 back on the 13th of March ahead of the next major downside extension, which will be confirmed on a break below the 2016 low at 106.24, opening fresh downside towards the 104 area. Only back above 108.26 would compromise this outlook. Aussie dollar. So Aussie is in the process of consolidating after breaking down below some key support at 74.92, which should open the door for the next major downside extension in this market, potentially exposing a drop all the way back down towards the 70 area. In the interim, any rally should be very well capped, ideally ahead of 76, while only back above the 2017 high at 77.50 would compromise the outlook. Dollar CAD. So despite some setbacks in dollar CAD this week, the market has been consolidating, and overall there is a higher low sought out now at 132.64, that low going back to the 21st of March, ahead of what could be the next major upside extension, eventually beyond the multi-day peak at 136 and towards 140 further up. Only back below 132.64 would delay the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi continues to be very well capped into rally, showing signs of the formation of a major top since topping out back in 2016 just ahead of 75. In 2017, this market has topped out ahead of 74 at 73.76, and we'll see an acceleration of declines if the market can establish back below some key medium-term support going back to the 23rd of December of 2016 at 68.62, below which would expose a drop down towards the 65 area. For now, any rally should be very well capped, ideally ahead of 72. SPX 500. The S&P 500 has shown signs of stalling out after posting record highs back in early March, just over 2,400, but this stalling out is only a minor consolidation phase, and we would need to see a breakback below some key support at 23.20 to suggest the market is putting in a more significant top and seeing a structural shift, which could expose deeper setbacks down into the 2,200s. But at this point, again, the market needs to break below 23.20 to strengthen a potential bearish outlook or the onset of a bearish outlook and structural shift. Until then, remains risk for this consolidation to see a fresh higher low and upside extension towards record highs beyond that high that we saw back in early March, just over 2,400. gold. So gold continues to extend its recent run, with the market pushing up to another 2017 high, just shy of 1280 thus far. But the break that we saw above 1265, that previous 2017 peak, has confirmed a higher low at 1195 above 1180 and opens a measured move upside extension towards 1335, just shy of that 2016 peak at 1375. Dips in this market should continue to be very well supported, as the market has been showing signs of a major base since 2016, and only a break back below 1195 would really delay the constructive outlook for gold.